Hi, this is Dan McLaughlin with another one of my updates on the Irish housing market as at early November 2016. We start by looking at the trend in Irish residential prices nationally. This chart shows you the annual change, and we can see that particularly in 2014 we saw a very rapid house price inflation, with prices rising around 20% by the middle of 2014, but then fairly pronounced deceleration in house price inflation through the middle of 2015, some stability in the first half of 2016, but in the last few months particularly the signs of a re-acceleration. The chart itself is based on the CSO index. They have recently changed their methodology. The initial index was based on mortgage lending, and it now transpires, as we'll see later in the presentation, that mortgage lending only accounts for around half of transactions. So there was a view that the index was missing a substantial amount of activity in the market. The new index is based on stamp duty and therefore captures all transactions. And actually the new index isn't greatly different from the previous version, although house prices did fall a little bit further than previously recorded, and the recovery has been slightly weaker, but only by a few percentage points, so there's not a significant difference in terms of the new index at all. We can now look at the trend in Irish house price inflation in a little bit more detail by separating out the developments in Dublin itself and the rest of the country. And from the chart we see it's very clear that particularly the strong acceleration in Irish house price inflation in 2013, 2014 very much centred on Dublin, and at one point house price inflation there was running around 25%. We can also observe, though, from the chart that the deceleration in house prices also was very much driven by trends in Dublin, and by the middle of 2015 annual house price inflation in the capital had slowed to only around 2%. Since then it's been in a fairly narrow range, 2 to 3.5%, but in the last few months to end August, which is our last data point, we have seen signs of some re-acceleration, with annual house price inflation picking up to 4.5%. Outside of the capital, though, the trend is a little bit different. We can see that the deceleration through 2015 into 2016 was far less pronounced, and also in the last 3 months we have seen a marked re-acceleration. The annual inflation rate at the end of August was 11.4%, but in the 3 months to the end of August, prices actually rose at 7.1%, which is the strongest reading on the index as a whole, which goes back to January 2005. From other sources, we can see that kind of pace of house price inflation hasn't been seen in Ireland since the latter part of the 90s, so there does seem to be quite a pronounced re-acceleration going on, particularly outside of Dublin. So what's behind this re-acceleration in Irish house price inflation over recent months? Well, first of all, let's look at some of the standard factors that drive the demand for housing, and one of those is household income, and in turn a big component of that is the trend in employment. So this chart shows you Irish employment going back over the last 7 or 8 years, and you can see that employment fell very sharply during the recession, but bottomed out around 2012, and since then we've seen initially fairly slow increase in employment, but latterly a rather rapid rise. In fact, employment has now risen by over 180,000 from the cycle low, and over the last 12 months has risen by about 50,000. So a very strong increase, taking employment back up above the 2 million level. Wages have also started to rise in Ireland, albeit at a fairly limited way, and particularly centred on the private sector. But overall, that means that household disposable income is now rising at a much stronger pace than we've seen in recent years. This chart shows you how Irish household disposable income in total, which peaked in 2008 at just over 100 billion, then bottomed out in 2011. And initially the rise was fairly muted, and we saw some actual further decline in 2013. But in the last couple of years, the rise in disposable income has been much more pronounced. We don't have full data for 2016, but it does look on the initial readings for the first half of the year that by the end of 2016, household disposable income could well be back up over 100 billion, so back to the pre-crisis levels. Demographics also play a strong role in housing demand, of course, and we now know from the 2016 census that the Irish population is a bit higher than previously estimated, largely because the annual estimates for migration proved wrong. These are the latest revised figures taking account of the fact that the population is now higher. And we can see that there was certainly a lot of emigration after the crisis, 2012, 2013. We can see the numbers leaving the country were well in excess of 80,000. But also we now know that the numbers entering the country were also stayed very firm, and minimum of 50,000 or so, and that has picked up in the last couple of years, to the extent that in the year to April 2016, the latest estimate suggests that we have now had a return to net immigration. In other words, the number of people coming into the country is now exceeding those leaving. So if we add that into the natural rise in the population because births exceed deaths, we can see that the demographic pressures are intensifying in Ireland now. Indeed, that also has wider ramifications, of course, beyond housing. It has big implications for the demand for education and health, and of course the pressures put on the public transport system. Another good indicator of the state of the demand-supply balance for housing is to look at residential rents. And this chart, which is based on the CSO data, shows the annual change in residential rents in Ireland across the country. You can see that it is a fairly competitive market in the sense that during the recession, residential rents fell very sharply, in fact declined by 20% at one point. But then began to recover, and as we move into 2012 or so, we see rents beginning to rise again. And indeed, in the last 3 years or so, the annual increase in rents nationally has sort of been in a very stable 9 to 10% annual rate, which certainly suggests that the demand for housing is exceeding supply. The government responded to this development of late by introducing a form of rent control, in that landlords can only increase rents now every second year as opposed to every year under the previous rules. But as the data suggests, that at least to date it doesn't seem to be having any significant impact on the market. The demand for housing, and therefore for rental housing in addition, is obviously pretty strong, but we can see from this chart that the supply of rental property is also a problem, because this is taken from website daft.ie, and you can see that showing the supply of rental property has fallen very significantly, a big trend decline in recent years, and is now down at historically low levels. So what about the supply of new housing? How has that developed in recent years? Well, this chart shows you housing completions as from the Department of the Environment's database. We've taken each quarterly figure and summed it over 4 quarters to give an annual picture. And you can see that there has been some improvement from the very low levels in 2012, 2013, when there was less than 10,000 housing units built in Ireland. 2016 figures to date would suggest that maybe by the end of the year we'll get something like 14,500. To put that in context, studies done over the last couple of years would suggest that the annual requirement is something of the order of 25,000 houses a year. And of course, every year that figure is undershot means that the cumulative shortfall is increasing. That 25,000 figure was also derived from expectations about migration flows, which have proven to be wrong. So perhaps the 25,000 figure in itself is now too low. The simple conclusion has to be that there is a chronic excess demand for housing in Ireland right now, and that the supply response is clearly inadequate to meet that demand. About 30% of the Irish population live in Dublin, and the implication therefore would be if there's a national requirement for around 25,000 units per annum, then in Dublin we need something of the order of 7,500, 8,000 units. And again, the data suggests that the house building is substantially below that requirement for the capital. This chart shows you total completions over recent years, and you can see that again there has been some improvement in the last few years, but 2015 saw less than 3,000 units completed in Dublin. 2016 will probably see some increase on that, but to a limited degree, and certainly still well below the 7,500 minimum figure that most people think is a reasonable estimate. Let's now have a look at the mortgage market, and this chart shows you new loans for house purchase by the Irish mortgage lenders. The data is on a quarterly basis, but again we've summed it over 4 quarters to give an annual total, and we can see that there has been a fairly clear pickup in mortgage lending in the last few years, from very low figures back in 2012, 2013. Where we got less than 15,000 new loans for house purchase in those years. The latest figures would suggest that we're going to see something of the order of 24, maybe 24,500 new loans for house purchase in 2016. We can also see a little bit of a dip in the chart as we moved through 2015. And that I think reflects the introduction of the central bank's new macroprudential controls introduced in early 2015 with loan-to-value limits and loan-to-income limits. The impact of those macroprudential controls can perhaps be better observed through the approvals data. And this chart shows you the annual change in approvals for mortgage loans. And you can see that by the end of 2015, approvals had fallen by 20% year over year, and a similar rate of decline in the first quarter of this year. The second and third quarters have seen a bit of recovery, though. Approvals are rising again by around 20% per annum, suggesting that the market has now adjusted to some degree to the controls. The central bank did ask for commentary and analysis of the impact of the controls, and we submitted a paper arguing that there was a role for such controls in the mortgage market, but perhaps with, as we'll see, net mortgage lending still contracting in Ireland, the timing of the introduction was perhaps a bit odd. Also, we've arguing that particularly the loan-to-value control should be moved through the cycle. Right now, it's put at 80% with some moderation for first-time buyers. But we argue that when mortgage when credit growth is very weak, and house prices are not excessively valued, that perhaps it should be something of the order of 90%. But then as credit growth becomes more excessive, or as house prices accelerate and become overvalued, then the loan-to-value ratio should fall back. Remains to be seen if the central bank will introduce any changes, but it doesn't appear likely, I think, in the short term that they will. As we've seen, new mortgage lending has certainly picked up, but one of the features of the Irish household sector has been the deleveraging that has gone on since the latter part of 2008. This chart shows you outstanding household debt in Ireland. You can see that very strong increase in debt through the boom years. It peaked around 200 billion, but since then, since the latter part of 2008, in other words, something like 8 years now, we've seen a reduction in outstanding debt or deleveraging by Irish households to the scale of something of the order of 55 billion. In terms of the debt burden, the debt-to-income ratio has fallen from over 200% at the peak to the current level of around 150%. That's still well above the Eurozone average, but clearly the Irish households have reduced their debt burden very substantially since the crisis. So we've seen that despite the fact that new mortgage lending has been picking up, albeit from very weak levels, we're still seeing significant deleveraging from Irish households. And we can look at that in a slightly different way in this chart, which shows you the change in net mortgage lending, the annual change as reported by the Irish Central Bank. And you can see that on that basis, net mortgage credit in Ireland has been contracting now for around 6.5 years. The latest figures would show something of the order of a 2% decline that's still evident. However, the pickup in new mortgage lending is now such that perhaps we are seeing the early stages of a change in the trend. It's too early to say that we'll return to a period of positive credit growth anytime soon, but certainly the pace of deleveraging, I think, has clearly slowed. One unusual feature of the market of late is the fact that it's not been driven by credit, in that we've seen that house prices have started to rise strongly in 2013, 2014, and although they softened somewhat in 2015, the last few months suggest another re-acceleration. And historically, one would usually associate that with strong credit growth, but as we've seen, net credit is actually contracting still, and although new mortgage lending has picked up, it's still pretty soft by historical standards. And we can illustrate the unusual nature of the market in that sense with this chart, which shows you new mortgage loans on a quarterly basis for house purchase relative to the quarterly level of housing transactions as captured by the property price register. And you can see on that basis, new mortgage loans in general have not even accounted for 50% of the market in most quarters, and often below that. So clearly there are non-mortgage buyers are very, very important in the market right now. They include cash buyers, they include property funds that have, particularly foreign property funds that have come into the market. We've also got some Irish REITs who are now buying residential property. And of course, the new pension rules, which allow retired people to use their pension to invest in assets, and there may be significant amount of pension money also going into the housing market, particularly with the fact that bond yields are extraordinarily low levels, and deposit rates in the average bank are very near zero now. So as I said, an unusual feature. It is worth noting that in in the third quarter of 2016, at least from the initial data, the new mortgage loans do seem to be accounting for something of the order of 55% of the market, but perhaps a little bit too early to think that that's the start of a new trend. What about mortgage affordability? Well, this chart is our attempt to model affordability by looking at taking a new 25-year mortgage based on the latest data, looking at the interest payment on that, again looking at the latest figures, and comparing that with average income. And we can see from the chart that affordability over the period that we have the figures for, which goes right back to 1975, that on average a new mortgage accounts for a little less than 29% of income on average over that period. But there are certain times when affordability is very strong, as in the early 1990s. We can see that the average new mortgage at that point was only costing a little over 20% of income. And we now know, of course, that was the start of the housing boom, which lasted until 2006. We can also see from the chart that as we moved in through the noughties, affordability deteriorated very sharply, reflecting a combination of rising house prices and therefore rising mortgage loans, but also, of course, the fact that interest rates went up to 2008 indeed. Since then, of course, interest rates have plunged and house prices have fallen sharply, so the average new mortgage now is a lot lower than it was. And also we're beginning in the last few years to see a rise in incomes. So consequently, affordability is again very strong. We can see that it's less than the average new mortgage is now less than 25% of income to service, which again is well below the long-run average and is back to levels that we last saw around the late 1990s. What about house prices in general? We've seen that house prices have risen fairly strongly since the cyclical low. So are they now, are house prices now expensive or overvalued? And it's difficult to answer that in any unequivocal way. You can use various metrics and to value house prices in some kind of fundamental manner. And one way is to look at house prices relative to rents. And in this chart, we do that. We take house prices nationally, comparing them to national rents. And it's pretty clear that in the mid-noughties, that ratio became stretched. House prices rose very significantly relative to rents, suggesting an overvaluation. And obviously then we had the subsequent correction. It now looks so on that metric that house prices are not excessive relative to rents. If one argues that the rental market is fairly competitive and accurately reflects a kind of demand-supply imbalance in the market for housing, then if we take house prices relative to rents, we can see that on that argument that house prices are not excessive. Of course, this is a national figure, and that doesn't preclude the fact that in some areas we could have house prices now that are excessive, but in the aggregate, this metric would certainly suggest that isn't the case, at least nationally. Let's now summarize our presentation. We found that house price inflation in Ireland had accelerated strongly in 2013, 2014, but then slowed particularly in 2015 before stabilizing in the first half of this year. We also found that there has been a re-acceleration in the last few months, particularly outside of Dublin. And we looked at then the demand side of housing and found that employment is growing strongly and household income growth has also picked up, implying that on the demand side, if anything, demand for housing is strengthening. And also when we looked at the rental market, showing rents nationally still growing at 9 to 10% per annum, and indeed rising to record levels, it implies that there is a significant excess demand for housing in Ireland as a whole. On the supply side, we looked at the fact that the supply of rental properties is at an all-time low, and also, although house building has picked up, completions are still well below what most people consider to be the annual requirement. 2016, for example, house completions are likely to be less than 15,000 against an annual requirement of at least 25,000. And that latter estimate may well be too low given the underestimation in terms of population growth that emerged when the 2016 census was published. We've seen a return to net immigration, which is also adding to the demand pressures. On the mortgage side, we saw that the central bank introduced controls in early 2015, and that seemed to have a pronounced impact on approvals that materialized through the latter half of the year and into 2016. But the market has subsequently adjusted. Approvals are rising again, something of the order of 20% annually in the last few quarters. And that new lending has also stabilized and is likely to end 2016 slightly ahead of last year, although still well below what one would consider to be a normal market. So the conclusion has to be, I think, that it's certainly a supply problem in Ireland. Demand for housing is very strong, and clearly the issues lie on the supply side. And the implication is that absent a big demand shock, prices are likely to continue to rise. We now think that by the end of the year, nationally, Irish house price inflation will be running around 10%, which is compared to about 4.5% in 2015. And so clearly an acceleration, and also the fact that it's, I think, above what most people anticipated early in the year. Of course, other shocks can emerge or other events can happen to change the market dynamic. One of the most obvious ones, of course, being Brexit. Different views on that. I suspect myself that Brexit will be negative for the Irish economy, which will dampen the demand for housing. But against that, some people believe that Ireland could be successful in attracting companies, particularly on the financial side, into Ireland, which would obviously boost the demand on that side. So I think it's it'll be interesting to see how that transpires, but that's unlikely, I think, to develop in the very short term. So absent that, I think the issue is still very simple. Ireland has a chronic excess demand for housing. So that's it. We've come to the end of our presentation on the Irish housing market. I hope you've enjoyed it and it's been informative. If you'd like to learn more about the Irish housing market, or indeed anything to do with the Irish economy, please visit our website, www.danmclaughlin.ie, where you'll see a lot of research and data on the economy, as well as being able to access our periodic blog on economic developments.